Okay, hello everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, June 9th. Good morning to everyone in the room. Mark, GS, Eileen, Permendra, Ty, good to see you guys this morning. So I'm getting a message here from Eileen saying the dollar's in a hurry today. Yes, it is. So there's been some nice plays in overnight. For those of you trading Europe, again, I hope you're catching those moves. A lot of them are playing out right on that Asia Euro crossover. But we'll go over the broader dollar setup here first, and we'll take a look at the intraday trade setups that are on the intraday charts. First things first, a quick look at the relative dollar performance as we open up the session. Euro is off by 0.42%, worst performer on the day. We'll look at that. The pullback in overnight came into a very nice region. From the swing side of things, we just missed entry on that, but from the scalp side of things, the triggers have been very clean over on Euro. So we'll take a look at that. And then obviously the Euro Oz and the Aussie dollar were in focus as well. Interesting tidbit here on the CAD, best performer on the session, up 0.53%. And certainly the dollar CAD was also on the radar charts last night as we continue to hold really clean monthly opening range. So we'll take a look at that. As far as the economic docket is concerned for today, you're pretty much limited to the event risk. You do have some data coming out with regards to wholesale inventories from the United States about 10 o'clock. Not major reads, guys, but certainly the GDP print we got from Europe in overnight coming in right in line with expectations, 0.4% and 1% year on year. This is the preliminary read for the first quarter. Trade balance figures out of the UK were also slightly better than expected. Smaller deficit. And then also in overnight, we did get some data from China, and the CPI data there came in slightly softer than expected. So that's something that you want to take for broader risk appetite. So the CPI coming in at 1.2% year on year, that expectation was coming in at 1.3. Still a drop off from 1.5, and certainly with the deflationary concerns that the whole essentially global economy has been looking at, that might cause a little bit more of an event risk ripple there on that front. So now that's out of the way, let's jump into the charts and see what we're looking at. Real quick, here's what the dollar looks like first. You know, we're coming into that support structure, basic trendline support right off the lows. Don't really like these super steep angled trend lines, but it's something to look at. You might also keep an eye on this one. Some people are probably looking at that slope. Either way, guys, the operative play here, or the basic support structure you're looking at, is the same one that we opened the month with, 11.887 into 11.880. And again, remember, the high stretch for February, that zone also caught the opening range high for May, and on a closed basis has been the opening range low for this month. So the risk, again, is for a downside break below 11,880. You look for a nice clean target right here, 50% retracement of the advance, 100% extension from the decline, and that brings you into 80.39, 11.843, this region right here. Okay. Again, we could get a pop near term. Here's what the structure looks like for the dollar index on the 30-minute. So we've been watching and tracking this setup since last week. If you guys remember, if we zoom out, basic trendline support, there it is, near-term resistance. And again, also the slope lines off the highs that we made for the start of the month, also testing that as resistance right now as well. Could get a pop higher. Wouldn't even be surprised to see 11.960 again. But the broader biases for the crosses that we were looking at versus the dollar, guys, remain unchanged. Okay, so we're looking higher in Euro. Aussie dollar is making some moves. We're looking for confirmation of that reversal. And we'll take a look at Kiwi, too. It's been an interesting story since yesterday. All right, so let's jump right in. First things first, Euro dollar. Here's what the Euro looks like on the daily. Okay, so we're holding very nicely within this median line formation. It's been a very clean start of the month. You got that one run through here on the 4th, but again, we closed much lower on the session. This is the region in focus, okay? The pullback in overnight didn't quite, or the rally that we saw in overnight above 13.13, 13.23 couldn't quite make it, okay? And momentum was completely flattening out. The trigger on this trade was the 70 break here. Stop against the highs. Again, this panned out just the open of London trade. So that could see some more pullback as well. Again, we're looking to stay constructive here above this region right here, 110.50, 110.33. Near-term bullish invalidation right up at 111.88. Okay, so if we break below this, we'll look to sell support triggers, looking for a drop into 111.13. But broadly speaking, we're looking for pullbacks to get on the long side. 111.88, guys, just as a quick reference here, is the 1618 extension off the low. But more so than that, it's been such a clear pivot in price. Resistance, 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 breakthrough, support, break. Again, every break that you see leads to a little bit more of a stern run. Obviously, this was non-farm payrolls, but you saw it here on the breakout. You saw it here yesterday as we drifted into the close, or into the open, rather, of U.S. trade. And that's going to be near term the same level that we're looking at as support. All right, and in fact, if you just take a basic trend line right off the lows here, should offer some guidance as well. Okay, one other thing that we'll want to look for heading into the United States session, guys, is this momentum signature to hold above 40. Remember, we started the week kind of wishy-washy. We made it into overbought territory that keeps the upside bias in play. On the downside pull here, hold at 40 would certainly keep us more on the constructive side for euro dollar. Keep the daily chart in mind, okay? 113.91 is a basic 88.6. We just missed that on that stretch here on the 4th, but clear way into 114.73. And that's basically the high that you made for May, and also longer dated 16.8 off the lows there that we've already responded to. So the levels are pretty clear on the euro. If you're not holding short exposure right now, we'd be looking for a long trigger as we get closer to 111.88. And the near-term structure still looking pretty clean. By the way, the extension that we made was an exact 2618 off the low as well. I just want to note that at 113.76. That's exactly where we peaked last week. So breach above that 113.23 barrier, that's really another level that you want to contend with to get the upside. All right, if there are no other questions on the euro dollar, we'll continue to keep an eye on this one. Here's what it looks like real quick on the 5-minute chart. Okay, you had this consolidation I was looking at earlier today. It looks like you're getting a trigger break here. You don't really much have to as a stop, but again, we'll be looking to see how this reacts as we head into the U.S. session. If you set up a nice opening range lower here and a trigger gives out, might be a nice offer for the long side again on euro. All right, moving right along. Euro Aussie was another setup. Here's what we look like on the daily. Again, another compelling setup with a break above 144.48 specifically, 144.50. Last week really shifted the bias and kept us looking higher here in Euro Aus. That extension reaching 146, basically the 147 handle. Oh, guys, I'm sorry. The mic might have been a little quiet here. I didn't have it on. Probably sounds a little better. But looking at this here, again, 147, the 618 off the high. On the near term, here's what it looks like. Okay, 147.04 actually turns out to be the exact October swing high. Okay, so that is going to be the October highs here at 147.04, 147.05. And again, in overnight, that was sort of the barrier breach that we were looking for. The extension just missed that target at 147.60, 147.59 by about 8 pips. Okay, keep in mind the breakout here was more than a 50 pip rally. We're only looking for about 40, 45 pips per scalp. So make sure that we're always keeping in mind what the ATR is doing and responding accordingly, obviously, per scalp. On this trade, there's a little bit of a different dynamic in that, unlike the euro dollar, which broke well into overbought territory and now is testing 40, we never really made it into the 70 barrier here in momentum. Okay, and in fact, there's some divergence that you're seeing here on the RSI signature. All that we're looking for, remember, for divergence is that price or the oscillator, right, is not proving an extreme in price. So here we are with a new extreme, a new high, a fresh monthly high. the oscillator continuing to hold the same highs. To me, that's still divergence. Okay, it's not necessary that this is a lower high. All that you're looking for is that this is not confirming an extreme in price. So again, trigger break followed by some divergence here, shifts the bias to the downside after failing at that 47.60. Listen, I still think you get a nice long position out of this. Not surprising here with the Aussie doing what it's doing, but we'll certainly be looking for long triggers lower down. Near term, looking for this former trendline resistance to possibly come into play. But essentially, as long as you stay above the weekly low, 145.15, 145.17 here, we'll be looking for possible long triggers on the Euro-Aus. Here's what the daily chart looks like. And again, that's basically the region that we made right here. So as long as we hold above this median line, we don't want to get excessively excited about the short side just yet. It looks like it could be a near-term advance off the low here that may be capping out. Even if that's the case, 144.50 is still going to be the invalidation for the broader trade, and that's down here. Okay, so a little bit of a neutral stance here to open up the session. We'll see how the opening range looks like so far. We're holding right below that pivot that we were looking at, 146.15. So if the opening range sets up here and then we see a downside break into the 9:30 10 hour, look for a drop into 145.15. And here's the broader structure looks like here for the Euro-Aus. Questions on Euro-Aussie before we move on? Nice little wider range scalp here than we're looking at with the dollar crosses, but we'll look to see if we can get any squeeze out of this if we make it a little bit lower here below the 46 handle again. All right, last but not least, we'll take a look at the Aussie dollar. Then I'll take your questions. Guys, if you have any questions, trade setups that you want to review, feel free to throw them on the message board. I see Mark here with that dollar CAD question. We'll definitely take a look at that. Also, obviously, we have the RBNZ on tap tomorrow, so we're going to want to keep a look on that as well. And some interesting setups in the sterling yen, sterling Aus, something we'll take a look at. But really quick, here's what the Aussie looked like yesterday. We've been talking about this support for a couple of weeks now, guys, so I don't want to spend too much time talking about this. You're basically looking at 76.03 to 75.90 as major key support, 75.90 being the 2015 low day close, 76 just being a simple 88.6 retracement off the low, but we've continued to find support there so far this month. Here's what Aussie looks like on the daily. All right. So in the broader terms, just to review real quick, we had ongoing divergence since the start of the year into the lows that we made for April. On every pullback in price for the Aussie, we've continued to hold 40 support. And here's a trigger that's testing to the upside as we're trying to push again through this median line. So if we get through this, it's been sort of messy already, guys. We're just using this for guidance right now. But if we get through 77.37, we'd start to look for that rally back into 78.18, again, the monthly high. And then this is going to be your key resistance near term. It's 78.80. Coincides with the upper median line parallel and a basic 50% retracement of the range. Here's what we're looking like on the 30-minute. So in comparison to what we were looking at yesterday or last night, you saw that level break at 76.67, 76.40, 76.35, 76.36 was going to be the bullish invalidation level. Okay, so we dropped right through 76.60 and the bullish invalidation level held. In fact, we didn't quite make it quite that low. Trigger and momentum gave out both on the 5-minute, and there was a very close one here, even on the 30 that gave out after a 40 hold, shifted the bias to the upside. And again, we're kind of continuing to cap out here near the Asia highs from last night. So you could see some more chop. Broadly speaking, you're constructive above 76.40. Again, that's the opening range high for the week. And with the momentum signature now holding 60, we'll want to see either a drop and hold here into 40 with a long trigger, or again, a break of these highs to keep the bias shifted to the upside. Resistance is 77.30, and 77.60 has been a very nice pivot in price. Okay, the potential for this to launch a rally into 78 and above is still there, guys. As far as event risk is concerned, heading into Thursday morning or Thursday afternoon here in the United States, Thursday morning in Australia, you get the employment figures. Those have been known to be quite variable from Australia, so it could give us a catalyst. And then obviously, you get retail sales out of the United States and Friday's University of Michigan confidence survey. So there's still event risk on tap here. Basic premise, we're looking to see if this bottom holds. And again, near term, we'll want to see if that holds back into 67, 67. We're going to choke up that near-term bearish invalidation or bullish invalidation, guys, to hold with this lower median line parallel. So the same one that you're looking at on the daily chart here is right over here. This is a little bit more of a near-term view, okay? And again, if we take the high in price on a close basis, remember when you're using these triggers, guys, we want to make sure that we're trying to get the high in price. All right? And if we take a trigger off that high, it's going to be very shallow, but might offer some guidance here as we open up the session. Looking at the 5-minute chart for the Aussie. Let's see if we got any triggers on that. Okay. That's one that just gave out. And here's one for guidance on the upside. Let's see if that 40 holds near term as we open up the US session. So here's an example of the Asia Pac, guys, opening range. And just to walk you through it real quick, here's the Sydney Open, here's the Tokyo Open. We drifted into a low into the Tokyo Open. Tokyo, within the first hour of trade, launched into a new high. That's your opening range right there. You drop a line just to give yourself some guidance. The opening range low. Here's the opening range high. And you look for that downside break. That downside break came right here, 225 in the morning. And that was a break of the lower median line parallel for that near-term structure. Okay. So again, shifts the bias to the downside, 76 into 46. Yeah, you would have squeezed out more than 25 pips on that one. So keep that in mind when we're coming into these sessions. As far as the US opening range, most of those have been playing out a little bit deeper than the 9:30 slot, guys. So give it some time as we start to open up the session here before you try to ascertain bias on some of these. All right, last but not least, let's just go over quickly what the gold trade is doing. That's been making some moves and also testing some interesting levels here. Here's the gold trade looks like to open up the session for New York. Last night we talked about the upper median line parallel here being sort of a near-term resistance. We're making it through that right now. 1185 is going to be the break required to shift the bias to the upside. As I said in the notes, guys, today's close is going to be really important, okay? If we make it through and we close above this region and momentum, which is testing a multi-month trigger here, after a 40 hold, if this breaks as well, we'd be looking to play that recovery higher in gold, okay? And that can take you right up into 112 again. That's a 50% retracement. You have a host of median lines that are all confluencing there as well. First area of resistance, 1184, 1185. All right. The broader trade, I still think, remains weighted to the downside. But with the break of this near-term structure on the upside, look for 1185. And again, that's going to be the reversal close that we made right here on the 3rd that took us below this multi-month trendline support. Okay. And that multi-month trendline support also comes into that same region. So we'll be seeing if gold can track higher here. We'll be watching the dollar trade too. It's interesting to see that the index is higher today as well as gold. So again, that corollary is not really the strongest way you're going to want to play gold if you guys are interested in that trade right now. You're going to want to really focus on its own merits and also on interest rate expectations. That's really been the biggest pusher of gold. If U.S. data starts to slow, and people start to push out interest rate expectations, that's only going to give gold more support. So we want to watch that dynamic very closely. You're seeing all these people who are dead set on a June rate hike now starting to push that expectation out further. And again, that's only going to be a positive near term for gold. The biggest threat for gold is that they move on interest rates very soon, because gold does not provide a yield. So for people looking, or for traders looking for that yield, holding gold is not going to be, a favorable play. Okay, so let's jump into some of the charts that were on the radar for yesterday. First thing first is Kiwi dollar. I do want to just look at this. We have RBNZ on tap tomorrow. I see some great pairs here in the sterling. We'll definitely take a look at those. Gert, Chintan, Mark, for sure. Real quick for Kiwi, we made it. We closed yesterday. Let me show you the close. It was very precarious. I was looking to see if we closed through this. It looked literally yesterday like we closed right on it. This is just the median line from the decline off the April highs. And remember, for Kiwi, the major support barrier that we were watching was the 2011 low, and that came in right around the 71 handle. If you zoom out even further, let me snap some lines. You had that long-dated trendline support. Okay, long-term median line parallel. This dates back, again, the tail end of this dates back to 2000. So you're talking about a real long-term structure. You got that one spill below it, obviously on the non-farm payroll print on Friday, and here's a quick reversal back above. The initial reaction here tells you something. But one thing I do want to take note of is this. You're still trading within a basic monthly opening range. Momentum is still holding sub 40, okay? And while we got this momentum trigger that gave out early in the month, price hasn't followed through. So this is why that we're keeping it on the radar right now. I do want to see, it looks like it could be putting in some sort of near-term low, a topside break above 71.75, which is the 2011 low day close and the February stretch low. If we make it through this, you'd look for a rally into that monthly pivot. It's about 72.60. And again, that coincides with the upper median line parallel here today. If we make it back below today's lows specifically, which was another perfect tag of this multi-year trend line, sayonara. Things could get really ugly for the Kiwi. I told you this yesterday. Below that structure, guys, basically below here, you'd start to get a little concerned for a more precipitous drop here in the Kiwi. So GS saying, Michael, after Kiwi, can we please comment on EuroKiwi? Sure, absolutely. All right, so in the near term, here's what the Kiwi dollar look like. Excuse me. So I tweeted this chart yesterday. You might have seen it on MB4X. Here's the resistance confluence that we were looking at. This is a proposed pitchfork just off the lows that we made the last 2 weeks here. It's too early to tell if this is really going to come into play. You want to be cautious about these real short-term pitchforks. But yesterday, you saw that nice confluence region here. We overshot it by a couple of pips, but broadly speaking, we held overnight trade. We noted that, we're going to want to try to stay constructive on the radar charts above that 70.86 barrier, okay, which was the low day close. And that's exactly where this thing found support. So on the near term, the momentum structure definitely looks like it's changed. You're getting divergence here. So we'll look for the immediate focus is looking lower, but you still want to be constructive, looking for long triggers lower down in price. Okay, this has changed from late in the week. Ever since the peak we put in last week, here's the weekly open. On the drop, you went sub 40, 60 hold, 40, 60 hold. There's the sub 40 print, keeps the downside and bias. And again, this invalidated things early in the week here as we broke through back above 70.86. So again, it's too early to tell if we've actually made a turn here in Kiwi, but broadly speaking, we'll be looking to see if that 70.86 holds a support, and we'll be looking for long triggers well above that region. All right. RBNZ is on tap. No expectation for an interest rate change per se, but certainly we'll be looking for the comments coming out of Wheeler. We talked about this yesterday. I don't want to bore you guys, but he's been known to really jawbone the market, specifically as it pertains to the New Zealand dollar. And again, expect some volatility tomorrow as we head into that read. We'll take another look at where this is positioned in tomorrow's webinar before that interest rate release. Okay, so that's the radar chart here for Kiwi. Let me know if you have any questions on that. And moving right along, GS wants to take a look at EuroKiwi. So let's take a quick segue here and look at what EuroKiwi is doing. Right, so this is still holding that major resistance level, GS. I want to point out a couple of things. I remember, I think we were talking about this last month. Look, there's the upper median line parallel from the decline off the highs that you made over in late 2014. It's a basic trend line resistance, irrespective of the pitchfork. But also, you're looking at a 764 retracement of the decline. In fact, that was a really nice pivot in price, if you look back. And even on the near-term approach, okay, using the lows that you made just here in 2015 in January and April, the upper median line parallel there comes into the same region. So you're checking a major area of resistance. A break above this, again, you could just see a straight pop. Initial targets would be the R2, around 60.60, and then you'd be looking for the high day close. Comes in at 63.30. This is an interesting setup, actually, GS. Let's see what the intraday charts look like. There we go. 63.30. Bear with me 1 minute, guys. I do just want to check a couple of different things. I haven't been tracking this, so I do want to see if we've completed any meaningful extensions here off the low. Ha! Look where the 618 comes in. Same region. All right, so this is pretty big. This is a pretty big level here for Kiwi. I'm just going to highlight this. That's really the level to beat to get more in the upside. Near term, so the immediate focus here is going to be to the downside if we close at these levels today. You've made an outside reversal at the highs. That high extends into a new fresh yearly high. So the high that we made earlier today, obviously here into 159.36, makes a new 2015 high. Outside reversal at the highs really puts this trigger into play. So one other thing I'd want to take into account is this. Again, bear with me, guys. Just going on the fly here. Possible median line formation here, also highlighting this region again, right? And one other thing we want to take a look at is just a basic retracement off the low if that high holds. We just want to have this in view. Puts the 236 right at the support structure we're looking at. So pretty clean levels. Pretty clean levels. Definitely at risk for a near-term pullback here. The broader upside remains in play. So GS on the EuroKiwi, this is what I would tell you. It's an uptrend at resistance, man. So you either see a near-term pullback here and you look to get back on the long side somewhere at that lower median line parallel, or you know, a break of this region. I really wouldn't get comfortable taking a break out of the highs unless we clear, you know, this entire region into 59.60. Don't forget, I mean, this is the major trend line off that 2014 high that we're looking for. Looks pretty good. And I would like to see a topside break. Immediately, you might see this break lower. Let's see what the near-term charts look like on EuroKiwi. Okay, it looks like I had that same pitchfork already drawn here. This was a nice multi-week pitchfork that gave out in late May. We can probably get rid of that at this point. Okay. And just let's see if this tweak here has any structure to it. Okay, could be what's in play here. I do want to note that the momentum signature has turned over, and we're now testing the weekly opening range low. So here's your Sunday open. Yeah, you dribbled a little bit below it, but you can see that this decline actually makes 100% extension off the high. That's 156.90. Near term, that's what I would gauge as our near-term bullish invalidation level. Okay, momentum has turned over. You had a trigger break, multi-day trigger break that gave out this morning, I guess, about 2 hours into the European trade session. And with that drop here, you'd be looking for a rally to hold back at 60, maybe a rally back into here into 57.90. Look for short triggers, and we look to push this lower. The broader upside trade remains in focus. Remember, it's just that, again, on an outside reversal day into resistance, those are my favorite plays. Okay, so the broader major uptrend remains in play. I really don't want you to get excited about the shorts here just yet, but certainly near term, you could see this thing set back, especially if Kiwi continues through that median line we looked at on the Kiwi dollar, right? Adrius, good morning. No, you didn't miss Euro Yen. We'll take a look at that. And GS saying agree, major uptrend at resistance. Yeah, it's the best way to put it, GS. So your play here from the scalp side is either to be very nimble, half leverage on the way down, or just be patient, wait for that pullback to give us a better entry to take it alongside again. That's, for me, that's probably how I'd rather play it. I do think the yen could see some strength in near term. One of the charts on the radar yesterday, if you guys took a look. First of all, GS, are we good on this? He says, thanks. Awesome, man. If you have any other questions on EuroKiwi, let me know. Definitely an interesting setup. You sparked my interest here on this, especially if we start to get a little bit more of a Kiwi pull higher. Might be a nice play near term, but broadly speaking, I want to be on the long side. But real quick, on the radar charts, we took a look yesterday at the dollar CAD. And we wanted to highlight one quick thing. Despite all the volatility that you saw, despite all the rally that you saw deep into the month here in May, the open of June has been super clear for the dollar CAD, and we were holding a very, very clean opening range, which we're testing now to the downside break. Note that you're coming from sub 40 in momentum. Excuse me, and on the way up, 60s holding as resistance. Okay, so this pullback here, you look to find some support near term, near 50 in momentum. On the daily charts, there's really nothing on tap, guys. You might find some interruption at 123, that pivot high from May, but 122.40 is going to be a little bit more in focus for me today. If we head into tomorrow and the drop doesn't give us that 22.40 figure, look for the 23 handles initial support. That'll coincide very nicely with the lower median line parallel here. But today, if you do see this drop, 22.40 is still going to be the support structure you're going to want to use, possibly looking for long entries here. And with the same respect, this will be our bullish invalidation level. So if you see a sub 22.40 print, especially if momentum breaks below 50, that would be your indication that we're likely to see a little bit more of a steeper decline here in dollar CAD. Still like it to the upside, broadly speaking, on the longer term. From a scalp perspective, you're looking lower, okay? One other thing I do want to note is this. Losing my train of thought here. Oh, this is another example of an outside reversal at the highs, right? So on the 5th here, right on the non-farm payroll day, you pressed into a new high. You closed well below the Thursday low. Outside reversal near the highs are going to be our best plays. I guess the most prominent example I can show you right on this chart, which doesn't, is a cherry-picked example, obviously, but here's an outside reversal at the highs, right? Obviously, that was a major day on the 18th. We had a lot of event risk, and, it's a cherry-picked example, but just to let you know when those candles, for me, become much more significant. Okay, a lot of times you'll get an outside reversal mid-trend. A lot of times you'll get an outside reversal not at the highs. This is sort of the ideal scenario that you look for. Okay, I think you actually had a key reversal in sterling Oz yesterday. We'll take a look at that in a moment as well. But long story short, we're making it through the initial opening range low. If that does close below 123.84, which again has been a long-standing pivot in price for a couple of months, you know, you'd look to maintain downside exposure here for dollar CAD. Here's what it looks like on the intraday. So I know this chart might look a little cluttered here, guys, but these median lines have served us well, so I don't want to necessarily get rid of them. But here's the break that we're seeing here on the daily chart. Here's your monthly open. There's your monthly low. You pressed into the high almost exactly to the pip. That was the 2015 high day close at 125.59. It held. And here's the downside break. Okay. Objectively speaking, near term, one other interpretation of this, if we do push lower, is a near term double top. And now that we've broken that low, a measured objective, takes you down to 2170. Okay, so if this is going to materialize into that play, that's, you know, the breadth of the move that you can see. Now, again, I'm not going to necessarily target that entire move because, again, we noted 2240 is going to be a pretty big confluence region here on the daily chart. But just to put things in perspective of how bad this can get for the dollar CAD if we do make it below that lower median line parallel. All right. Also, that same break broke below this median line off of last week's highs. So right off the bat, you know, your 2367, 2385 is on the daily chart. That's going to be the level that you want to maintain bearish bias below, okay, for the dollar CAD. Near-term support, 123.26, 123.16. And again, downside break here, you look for the lower median line parallel, you look for 122.40. Any questions on the dollar CAD? Mark says, missed that short. Now looking for a short at 123.85 if it gets up there. We're on the same page, brother. We're on the same page. Just keep your eye on that median line. It might, you know, if we start to rally and it starts to fail here and momentum holds 60 resistance, just watch that region. I'm just basically pointing that not just because of that low, but also because of the median line off the highs here. So just keep that region in mind. But I agree with you. I think your levels are right on, man. Hey, Dan Wilcox saying, well, Mark, with regards to dollar CAD says looks high in the 30-minute, maybe 123.66 or so looks better. Yeah, that's about where it is. That's about where it is. So I just would keep a look on that region there. But momentum, you know, pretty clearly bearish. Again, looking at the shift from last week's low, 60 break, 40 hold, 60 break, 40 hold, 60 hold, 40 break. It's a shift in momentum, guys, a change in the momentum profile. So we'll look to maintain that bias. Dan saying, not a big fan of dollar Swiss, Mike. No, Dan, I'm not. I'm going to be completely frank with you, my man. I don't even track it these days. But that's not just because of what happened on January 15th, guys. I haven't traded dollar yen since the peg went into play. Or dollar Swiss, excuse me, since the peg went into play. So, you know, for a guy like me, it's for a near-term chart or a near-term trade for the last year or so, since the peg's been in play, the ATR on this has been somewhere in the range of 90 to 100 pips maximum. Now, obviously, since the January 15th event, you're seeing that expand. But from my standpoint, it's just not something I'm really interested in. Jamie will still tend to track this quite often, but not my cup of tea per se. He says, fair enough. I mean, if there's a setup that you're looking at, Dan, I'll be more than happy to break it down for you. you're still going to be following the same type of broader dollar price action. It's just, I just think there's still a lot of contentious play in this pair. That was a nice breakout. That was a nice breakout. Oops. He says nothing in particular, short from much higher. That's not the cleanest setup, but it's got some merits to it. Let's see here. Let's see what the near-term chart's showing you. I'm assuming you're in a longer-term position on that one, Dan. He says, hope so. Okay. The only thing I would say is this. If you're trading on a longer-term position like that, Dan, just keep one thing in mind, man. The monetary policy that we're looking at is unprecedented, okay? So if the Fed does start to hint of normalization, it's really going to be hard to justify a short dollar position, okay? Remember, we've had interest rates at 0 for the longest time in history at this point. And if you take the monetary policy divergences, the BOE and the Fed are the best poised, let's say, to start normalizing policy. So I would watch those interest rate expectations, Dan. If you start to see them pick up, man, it's going to be hard for me to justify taking a longer-term short dollar approach. Remember, on the index, the broader focus still remains weighted to the upside. It's just that we're coming off of resistance level. So we're playing the correction. I do think you can see this lower near time. Longer term, though, I'd be cautious about getting too excited about holding dollar shorts heading into early 2016. So quick note on that, Dan. Some food for thought. Hope that helps. Okay, the other radar chart that we wanted to go over really quick, went over dollar CAD, went over Kiwi. Oh, we went over all three. All right, great. There was another pair here that you guys wanted to look at, the sterling crosses. Let me take a look at those questions. Oh, here he is, Gert. Gert says, hi, Mike. Quick look at sterling key, please. Testing trend line support. Okay. Give me 1 second. Let's update this here. Here's your monthly opening range. Basic trend line support. This is probably what you're looking at, right, Gert? With you on that. No. Okay. Note the ongoing divergence that you're seeing here on the daily chart as price pressed into a new high, new high, new high. Haven't confirmed any of those highs. And in fact, now we're below 70 on the momentum signature. So I think you're looking at the right level. Not only are you testing trendline support, but just a little bit lower is the monthly opening range here, Gert. So if that monthly opening range gives out, I would be looking for a run back into this median line, upper median line parallel. A little bit of a messy structure. We had a couple of intraday setups on this, if you guys remember, a few weeks back, but it's sort of the definition of a chop fest. Okay, look at the daily ATR. You put in 253 pips on a daily basis. So definitely not for the faint of heart. The range is there after last month's crazy stretch higher. But also one other interpretation here is you could be putting in 1, 2, 3, 4, 5. Okay, if this is a 5-wave correction, you'd be looking for, or this is a 5-wave advance. Okay, you'd be looking for some sort of near-term correction here with a break below 213, 213.20, opening range low, trendline support. Not bad. Let me see what this pitchfork off the yearly low looks like. stop traffic. Look what this looks like, guys. Look where that median line comes into play. Right at the opening range low. Basic trend line support. Nice convergence right there. Not bad. Gert, you got it, my man. You're looking at a major support near term. Yep. All right, let's see what the daily chart looks like, or the intraday rather. Here's the weekly open. Okay, this is stale. Okay, and let's just see if we have any significant median lines here to play with. Further adding emphasis to this low that we're testing right here, I can tell you that the momentum signature certainly looks like it's turned over. Since the advance, here's last week's open. Every pullback, you got this little sliver here below 40, but every pullback more or less has held the 40 region, 60 break, 40 hold, 60 break. This is the first time we actually saw a strict resistance at 60 and a deep penetration to 30. So from a momentum profile, it does look like it's turning. You had some divergence all along these highs, right? Higher high on a close basis, higher high on a close basis, higher high, lower highs. I'd be looking lower. Near term, I would be very cautious about short until we break through that, or if you get a rally back into 2160 or so, the upper median line parallel, this might offer you a nice entry. But yeah, you are testing support. You're absolutely right. And if this is a simple correction, there's the 100. Actually, this turns out to be significant here. So bear with me 1 second. All right, right on. So if this is a simple correction, here's 1, 2, 3, 100% extension, you'd expect to see this hold. Granted, the fact that on the daily chart it's such key support, this adds further validation with short exposure warranted below 113.30. So if you do break below that, again, it's the weekly low from last week as well. You'd look to see that drop into 211.50. It's a big range here, guys. But remember, 64 pips is just a quarter of the daily ATR. So keep that in mind on the intraday positions here. Yeah, could be a nice play. That's the region of support you're looking to get through. This is the region of resistance. Could offer some nice entries. All right. And I definitely want to just highlight this pivot at 114.70. Looks very interesting as well. And the initial opening range low for the week, right? Nice setup. Nice setup, Gert. Cheers, Mike. Very helpful. Was thinking the same. Waiting for the RSI trigger in the 4-hour to break. Cheers, mate. I'm glad that's been offered. I'm glad that offers you some clarity on that. Let me look at the 4-hour too. Let me see if I can see. Yeah. So even on the 4-hour. Yeah, you just broke below 50 for the first time since here. Now that correction was very quick, and it dropped right into that same trend line and it held. So adding emphasis to this region here for sure on sterling key on the near term. And again, guys, calling the turn is never an easy thing, okay? Markets don't just run into a ceiling and reverse. Typically, the turning process takes time. It's typically very arduous, and it takes a while before it actually materializes. So all we're saying here is the initial hallmarks for some sort of near-term pullback are starting to show for sterling key, and we'll be on the lookout for that drop below 113.30. Okay. Dollar yen is what we didn't go over. And that was on yesterday's radar chart. I knew I missed something. Here's what the dollar yen looked like as we opened up Asia trade last night. Here's what dollar yen looks like right now on the daily. So the the pullbacks in dollar yen have been shallow, and everyone who's been calling for a pullback, and even when we were calling for some sort of pullback as we held that opening range for May, very shallow. Okay, so I just want to put that out there before we start getting excited. But very similar to what you're looking at on EuroKiwi, right? In that it's looks like it could be reversing. We've now pushed through basic trendline support off the lows from May, but we're sitting on this median line here, and that same region of support we talked about in yesterday's radar chart is the same region of support we're looking at right now. I'll bring your attention to the fact that dollar yen typically is not a very good player of the monthly opening range. In fact, it's been one of the worst players this year. If you go back to last year, obviously it was a very strong uptrend late in the year as we broke in September. It was a wash. We didn't touch this thing for like a 5-month span last year, I remember. But here's the opening range from last month, right? You push into a high, it holds. You pressed into a low, it was trendline support. You tested the high again. You got a break late in the month on the 19th, bullish against the lows, looking for that late rally or that late month high. You literally rallied right into the close of the month. So here we are again. Now, a measured objective. Remember that triangle formation that we were talking about. The conservative objective is 125.70. That hit. The more aggressive objective, I guess I'd say, takes you higher into 128.12, okay, 128.18. So we've hit that initial objective momentum, showed some divergence into the highs back below 70. And again, if we break back below the median line here, you could see this thing drop as low as 122.36. And that would be sort of the initial target that you look to play for dollar yen. So on that premise, euro yen, sterling yen look very interesting, okay? Before we move on, here's what the near-term chart looks like for dollar yen. We're looking at a basic retracement off the low. If you need this chart for your records, feel free, or for your reference, feel free to take a snapshot. Let me just snap some of these trend lines for you. Okay, so here's the near-term structure that we're looking at for the dollar yen scalp. Now testing a basic 38.2 retracement off the low. And again, broadly speaking, I'd be looking to maintain or look for short exposure while below that 125 handle. Remembering that near term, you are testing that support on the daily chart. So we're going to really be looking for that 123.6 break to validate a near-term turn in dollar yen. Mark says, isn't there a correlation between the Nikkei and the yen? Yeah, they tend to move pretty broadly. I'm not really stressing any correlations right now. On the turns, they're very hard. They can really mess with your head, Mark. That's all I'll say. So you don't know which one's leading, which one's laggard, especially on that specific correlation. I sent some charts yesterday to Jamie, who was also looking at some correlations between the New Zealand 10-year spread and what the New Zealand dollar is doing. In fact, I could probably show you that chart right now. And this is the kind of stuff that I look at with correlations, Mark. For intraday trading, I don't really think it's going to be the strongest play for, or the strongest thing for you to stress. But if we look at this, so what you're looking at, the white line, is the difference between the New Zealand 2 and 10-year notes, okay, the spread between them. What you're looking at in yellow is just simply the Kiwi dollar exchange rate. And if you look at something like this, what stands out to me is not necessarily that they're moving together or they're not, but on the turns, right? So basically what we're looking for is what will turn first, price, or will you see that spread start to widen out first? And if you take a longer or a long enough approach here, if my chart wants to move, okay, you can see what peaks first. And certainly on this type of trade, looking at this at the lows, you saw that price, or on this one, losing my train of thought, sorry here, the Kiwi turned first, and then you saw that spread start to change, right? On this high, the high was made in the Kiwi well ahead of where the 2-year spread made, right? The 2-year turned early on here in 2013. Kiwi continued higher and then turned afterwards. Now we're getting that dynamic very different, right? You're getting the divergence, and the turn, excuse me, and the turn in the spread again has preceded the turn in price. So near term, you're seeing that the spread coming into the lows that you made back here in April. Price, from a price standpoint for the Kiwi, also came off of that multi-year trendline support we've been watching, right? So these are the kind of corollary plays that I'll take a look at. I don't really want to necessarily really stress the Nikkei yen correlation at this point. But broader risk assets have been showing some pretty gnarly stuff lately, Mark, so keep an eye on that. Ty says, do you wait until the 9:30 to trade the U.S. opening range? To be honest with you, it depends on the pair, Ty. Some of the opening ranges, like I said earlier in the session, haven't even been panning out to like 10, some at 10:30. So the 8:30, 9:30 slot is what we typically use the opening range. Recently, that's been extending into the 10 o'clock hour, and then you're seeing that break between 10 and 10:30. What I can tell you is that the best positions I've been taking as of late have been into the close of Europe. So as you head into the 11:30 slot, a lot of time the market will pair a portion of the move that you made at the open, and that just gives you another opportunity to get back into that position. So, Ty, I hope that offers some clarity on that front. Good questions here today, guys. Adrius, last thing we'll go over really quick. We're heading into the end of the session here, and U.S. trade is about to open. Euro yen. Now that we have a picture of what the yen's doing and possibly coming into an area where we might be seeing dollar yen turn near turn in the interim, as far as the euro yen's concerned, the only thing I've been looking at this since the start of the week has been that 140.72, and it's a basic 618 retracement off the high. Also, interestingly enough, it's almost that swing high that we made back in September as well, and next to the gap open that we made in the open of November here. So an interesting area of resistance. Obviously, you have that median line, which has been kind of messy here, but other than that, it's been a very clean touching formation. So I'm not really willing to give that up yet. For me, I'd need a break back below 139 to get on the short side here, or to give us a near-term correction lower. That's going to coincide with the former upper median line parallel of this formation, and also the initial monthly opening range low. Oh, I'm lying. It's going to be the weekly opening range low. June opening range low, still got a lot of room for that. And near-term trigger and price looks like this on the daily. And let's take a quick peek at what the intraday looks like here for Adrian. Adrius, excuse me, sorry about that. Is there a specific question that you had on euro yen, or is there a position that you're in? Do let me know. I'll be more than happy to break that down to you. Here's the weekly open. Wow, guys, look at how this pivot line has continued to drive price for almost 2 months. Resistance, resistance, break, support, 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 break, consolidation, support, support, See a pivot break there. You're looking for a basic run into this trend line off the lows just from that swing low in May. And let me clean this up real quick. This extension is null and void. That's a void. This retracement can be extended now to the highs that we just made here. And one other retracement I'll just want to take into account for the near-term advances off the lows from that 25th. And the 236 comes in line pretty much with the weekly opening range low. So probably the better formation we'll want to work with. Pretty clean. Pretty clean. All right. So it further extenuates or further highlights a necessity for this thing to break below the weekly opening range low, the median line parallel here, the basic 236 retracement, and a move sub 139 really opens up a 100 pip drop, in my opinion. Right into the 138 handle. Ahead of that, you just want to keep in mind where that trendline support is. That's going to be variable based on time. Probably looking at 138.30 as a near-term target ahead of that, but you know where the regions are at this point. Also, into effect, you could be seeing this show us a near-term double top. Again, I don't like when people start to call these before the break because every run into resistance is going to look like a double top until it breaks. That's the point. So just to put things in perspective, that would give us a measured objective right into 137. And actually, that would be a 50% retracement and very close to those May initial opening range highs. Not a bad setup here on Euro Yen. Again, you're depending on a whole lot of yen strength. So I'd be looking to play half leverage on these until we get a little bit more conviction on the momentum turning over, which looks pretty good as it stands right now. This is the deepest penetration sub 40 you've gotten in 2 weeks. You know, we need to see that move sub 139 on this. Eileen says, thank you. I wanted to hear that too. And I was just looking at this, says Adrius. Yeah, I think it's going to pan out into something very interesting. I mean, the daily chart's pretty clear-cut, simple, that you're an uptrend at resistance. Just like some of the other trades that we looked at earlier today. A very simple uptrend at resistance. And again, you know, you'd look to be a little bit more nimble on the downside, but medium term, you'd use that pullback to get back on the long side of the trade. All right. Topside break above 140.70, by the way, begs a run into, let me bring this into the 764 retracement. Which comes right in line just ahead of that gap and the 2013 high day close, basically looking at 144.20 into 144.50. So you have a nice range to the upside if it clears near term. You're looking for that pullback. You're looking for a long lower down for medium term guys. All right. I'm going to wrap it up there. U.S. markets have been open for 4 minutes. Guys, we'll be back on tomorrow morning, 8:30 for another intraday strategy session. Hopefully we'll get a little bit more play on these. Watch the 10 o'clock hour. You do have some of that United States data coming out. And then again, heading into tomorrow, we're going to be looking at those setups, eyeing down the retail sales print for the United States and obviously the RBNZ as we head into Thursday. Guys, best of luck trading, and we will see you tomorrow morning, same time, same channel. Cheers.